You can feel it, right? That buzz in the air. This feeling that we are right on the edge of something absolutely massive with AI. It feels like a once-in-a-generation opportunity. But it also feels kind of familiar. A little too familiar, maybe. So that's the big question we're tackling. Are we living through the next great tech revolution, or are we just riding a huge bubble that's about to pop? All right, let's get into it. And this quote from the legendary investor John Templeton, it's the perfect way to kick things off. Every single time there's a boom, you hear people saying the old rules don't apply anymore. But history, well, it has a funny way of repeating itself. So it really makes you stop and ask that hard question, is this time really any different? To figure out where we might be going, we first have to look back. And wow, there is a powerful echo between the AI hype today and the dot-com bubble back in the late 90s. I mean, just picture it. It's 1998. The internet is this shiny new thing. All these tech companies are popping up out of nowhere with .com at the end of their names, and investors are just throwing money at them, absolutely convinced they've struck gold. The market goes vertical. Until, of course, in 2000, when the music just stops. And what a stop it was. The NASDAQ, which is packed with all these tech stocks, just fell off a cliff. We're talking a drop of nearly 80%. Fortunes were just gone. Wiped out. Only about half of those .com companies even survived. It was a really painful lesson in how markets can get swept up in hype. So that brings us right back to today. We're seeing that same kind of manic energy, that same hype, but this time it's all about AI. So are we just watching the same movie with a different title? Let's take a look at the warning signs. Okay, so warning sign number 1 is just the insane scale of this competition. This isn't some open field where anyone can play. No, this is a high-stakes arms race, and it's being fought by just a handful of giant companies spending an absolutely colossal amount of money to win. Now get this. The crazy thing is how concentrated this stock market has become. The performance of the entire market is now massively influenced by just 7 companies. We call them the Magnificent Seven, and together they make up a jaw-dropping 36% of the S&P 500. And yep, every single one of them is deep in this AI war. And when I say they're spending money, I mean, the scale is just, it's hard to wrap your head around. You've got Amazon projected to spend $100 billion. Microsoft, $80 billion, Google, $75 billion. The numbers are just staggering. So you add all that up, and in a single year, these few companies are on track to spend a combined $330 billion on AI. Just let that number sink in. To give you some perspective on how huge that is, that single year spend on AI is more than the entire economic output, the GDP, of a country like Finland. Now, this fire hose of cash is definitely keeping the economy going, but it begs the question, how long can a spending spree like this really last? And that brings us to our second warning sign. This is where things get a little weird. It's all about the financial plumbing of the AI boom, a system that some people are starting to call the AI money machine. Okay, let's just follow the money for a second, because it's kind of a circular path. Step 1, Microsoft pours billions into OpenAI. Step 2, OpenAI turns around and uses that money to pay Microsoft for cloud computing. Step 3, Microsoft takes that money and buys a ton of essential AI chips from NVIDIA. And then, to close the loop, NVIDIA takes its huge profits and invests back into other AI companies. See what's happening? Every company along the way gets to book this as revenue, which helps send their stock prices higher and higher. This analogy just nails it. It's like if I paid you $1,000 to dig a hole in my backyard, and then you paid me $1,000 to fill it back in. Did we actually create any real economic value? Nope. But on paper, we each just booked $1,000 in revenue. Now, obviously, the real world is more complicated, but it shows you how revenue could be getting, let's say, artificially inflated inside this whole tech ecosystem. So, who's the biggest winner in a game like this? Well, it's the person selling the shovels during a gold rush. And in this story, that's NVIDIA. They make the must-have chips that power pretty much all AI, and they're selling them to everybody. Because of that, their stock price is up a mind-blowing 1,600% since ChatGPT came out. Let me say that again, 1,600%. They are the ultimate arms dealer in this AI arms race. All right, that leads us to our third and final warning sign. This one is less about money and more about a fundamental, physical limit to AI's growth. And that limit is data. For years, the way to make AI smarter was simple. Just feed it more and more data. Every book, every article, every picture on the internet, just feed the beast. But we are coming up fast on what people are calling the data wall. The problem is pretty straightforward. By as early as 2027, projections show that AI models will have basically consumed all the human-generated data there is online. So this raises a gigantic question for the entire industry. If all this incredible progress we've seen depends on having more data to train on, what happens when the buffet is empty? Well, progress could slow down to a crawl, and that could completely shatter the sky-high expectations that investors are currently banking on. And this is really where the human advantage is so clear. You and I, we don't just learn by reading the entire internet. We learn by doing, by interacting with the world, by making mistakes, by experiencing things. AI can't do that. Not yet, anyway. Getting past this data wall isn't just about finding more data. It's about inventing a whole new way for AI to learn. Okay, I know. After 3 big warning signs, things might be feeling a little dicey. But here is the good news. Understanding the risks is always the first step to navigating them. So let's shift gears and talk about your playbook, how you can invest smart through all this uncertainty. First off, let's be really clear, this is not a perfect copy of the dot-com bust. The big difference is that today's AI companies have real products, they have real usefulness, and they have a pretty clear path to making real money. The problem isn't that they're worthless, it's that their stock prices might already be priced for a perfect future that just isn't guaranteed. So what do? Well, here's a simple 3-part game plan. Number 1, keep investing. For most of us, the best way is to just automatically buy into a broad, low-cost index fund every single month. It smooths out the ride. Number 2, focus on increasing your income. Having extra cash on hand means you can buy when everyone else is selling, and that's how real wealth is built. And number 3, diversify. You've heard it a million times, but it's true. Don't put all your eggs in one basket. So what does a diversified portfolio even look like? Well, this is a pretty good example. It's about spreading your investments across totally different kinds of assets, not just stocks, but also bonds, real estate, maybe even gold. Think of it like a seatbelt for your money. If one part of the market gets crushed, the others can help protect your overall portfolio. So here's the bottom line. Is a bubble forming? Maybe. Could it pop? Sure, but that doesn't mean you should run for the hills. By understanding what's going on, by sticking to a smart, consistent strategy, and by being prepared, you won't be one of the people panicking. You'll be the one who's ready to take advantage of the opportunity while everyone else is running for the exit. The question isn't if things will get crazy, but whether you'll be ready when they do.